Yes, sir. Here we are once again, coming live from the lair, the Savage Lair. Trying to make sure we have a good, nice little video going, and that you guys can in fact see me. Yes, sir. Here we go. That says Domo, not FOMO, just in case you guys are wondering. And I'm trying to make sure that we have good lighting here. In fact, let's see. Ah, getting better. Yes, sir. Once again, here we are live. I know that I said that I was going to, go live tomorrow, but we don't know if I'll be able to go live tomorrow at 5 p.m. So I figured I'll go live now and kind of touch base with you guys, and talk shop. Right? Let's talk about the Savage 20, and I'm gonna answer all questions you guys have. I figured you guys are watching me, thousands of hours in the last month on aggregate, right? And I figured, hey, you know what? These people are here giving me their time, and so of course, I'm giving you my insights, and we're talking trading, right? We're talking the stock market. We all have a goal, which is to make more money. My goal is to make 100 millionaires on this channel, like starting when I started this channel, obviously, and to hear success stories that you guys are trading. You guys made 1,000, 2,000, 3,000 bucks on some trade, and that you were able to get maybe an idea too from this channel. That's kind of my goal. However, I figured I'm gonna answer questions people have. Absolutely. Get to know the Savage, so to speak. So I figured, people are spending time out of their life watching me. They might as well know something about me. And I know sometimes people have questions. Also, some people have questions about credit cards. I know a couple of people asked about, what would be a good credit card to get. They have some expenditures coming up, right? Some people are spending $3,000-4,000 in the next month or two, and they say, hey, what would be a good credit card so that I can get points? You guys can ask the questions as far as credit cards go as well. I'm just, at this point, trying to be as transparent as possible. If you guys want to know I'm trading a specific stock, you guys can go ahead and ask me that question as well. Trying to be an open book, so to speak. And of course, we're going to be talking our Savage 20 stock, and how I'm trading them. If you guys want to have questions about a specific stock, right now I figured even if I'm not trading it, if I can go into it and have a look see, I can give you kind of like my 2 cents, right? Obviously, I'm not a financial advisor. I am not telling you what to do with your money, but it's always good to have insight from somebody that's not vested in whatever stock you may be into, because I don't have a vested interest, so I can give you kind of like a neutral opinion, right, of like what I got going, and how I would be trading that stock if I was trading it at all. And so I figured, you know what, let me go live and see what my fellow simpletons and degenerates are up to on this weekend of September 6th, 2005, my friends. I just came back from my son's soccer game. He's 6, and they won their game. I'm kind of happy right now because he tried his best and he was running hard, and he's just he's a good kid. He had fun, and that's what you want out of that age group, right? So, anyways, good morning, my fellow simpletons and degenerates. I hope you guys are doing great. Um, Here I am coming at you from the San Francisco Bay Area once again. And I hope you guys are doing great and you guys had a good Friday night. Hopefully, you guys didn't drink too much if you went out drinking. And hopefully, you don't have heartburn if you went to a crazy dinner yesterday. For those of you that stayed in, I hope you had a relaxing evening. You had a glass of wine or 2 or 3, and are having a good morning. Hopefully, you're having a good breakfast or you had a good breakfast. And so, let's go. Let's see who we got here in the house. Double D is in the house saying good morning. Good morning, Double D. Wherever you're from, good morning. Hector, good day. Hector, good day. How you doing, sir? Karen D. Hi, Savage. Any idea how GME earnings will turn out? Well, Good question. Yes. So GME um has earnings coming up next week, right? Remember, they're sitting on $9 billion of cash, right? So it's gonna be interesting to see. I think we're gonna have uh, a good outcome. I think they've been closing stores that are not producing money, right? That are not profitable, and they are now investing more money on the digital infrastructure, as well as they're getting into new markets, right? I think they have this digital card game on lock. People are very excited about that. They're also investing in crypto, right? They bought Bitcoin, I think around $90,000 per Bitcoin, and they have quite a bit of it. So they're now using their money to make more money, right? They're just the interest alone is bringing them in a ridiculous amount, millions and millions of dollars. They're also making money now on the stores that they decide to open, right? They'll keep open. They've shrunk their staff because I guess they're at this point, pretty much keeping the people that are good, their staff or employees, and that have the same vision, right? They have very good customer service, and they decided to turn the corner and go a specific route, and it's working. You know, Ryan Cohen is a good CEO. He's taking no money from the company, right? He's basically working for free, given that his interest, right, is vested in the fact that as the shares go up in value, being that he's very like a shareholder, right, of like he's got like 8 10 10% I think of the company, 11%. He owns 11% of the shares in existence. So it's kind of it behooves him to have GME be more expensive per share, because his net worth grows as this company shares become more expensive. That, and the fact that the guy is actually I mean, look at what he did with Chewy, right? I mean, he's extremely profitable, and I think that the numbers are gonna be good. I think we're gonna be in the green. Remember, this company used to be 1.5 billion dollars in debt. So just the fact that they have no debt, it's a big deal, right? So so the fact that they have no debt and they have money, cash on hand, it's insane. I mean, it's just the amount of money that they are sitting on is a lot, right? They have like I think 7.58 billion dollars in cash on hand, no debt, and they also have almost I think $1 billion worth of Bitcoin. I mean, it's insane. So they're and Bitcoin is obviously more expensive now than when they bought it, right? They bought it like around 80 in the 80s, $90,000 per Bitcoin. So I mean, it's $110,000 per Bitcoin now. So you know, um, you could say like 20% more. That then so the Bitcoin's worth 20% more than when they bought. So just that alone, it's making them, you know. Millions and millions and millions of dollars, and then the fact that Cohen doesn't take um, a CEO pay, so they're saving in that aspect. Um, yeah, no, it's looking good. I think that I think they're keeping the stock down, right? Whoever they is, I think they're keeping the stock down. The stock should be more closer to $40 a share, but for whatever reasons, it's been kind of pressured down in the 20s, the low 20s, right? So personally, I have few thousand shares myself, and I sold some covered calls. I think I sold 5 covered calls, around $200 each, a few weeks back, and I sold some September 19s, and I just wanted a quick $1,000, right? I just wanted them to pay rent. I am of the frame of thought that your portfolio is a building, right? And you are the manager of that building, and the shares, the stocks, the companies that you own in that portfolio, they're tenants, and they should be paying you rent monthly, right? So I just got kind of tired of just holding GME and just waiting for it to pop to 27, 28, and then writing 30s, and then because it's not moving from where it is right now. Not saying that it's not going to move. I'm just saying I wanted something, and I thought $1,000 a month to rent, an apartment in my building, it's justified. Um, my average is in like the 13s, right, on GME. So if I sell at 23, those were the cover calls that I sold. They were $23 strikes. I'm making $1,000, per contract, just on the value of the shares, right? And then I asked for almost $2 in premium, so I'm making $1,200. So I'm almost doubling my money, right? So almost a home run. um, and so I figured, if they do move and they happen to go to 25, 26, $27 a share, then I'll this week coming up, I'll roll, from 23s, you know, expiring, I think, in 2 weeks. I'll roll it to like 25s expiring in October or November, right? And then bring in some more premium, move up my strike. And that's how you kick the can down the road, right? You kind of move slowly with the stock, and then you let the stock tells you what to do. That's You're not trying to time the market, right? And if that happens, right, I have cash secure puts that I sold. I sold some $22 cash secure puts expiring in September, and I sold some 23s and 30s that expire in October, and some 23s and 30s that expire in January. So if it so happens to run 25, 26, $27 a share or more, then I can buy back those cash secure puts, or just dare the market to take me out. And then at the same time, I would sell covered calls on the shares that I still have to write covered calls on, that I haven't written anything on, and then I'll write some 30s, for 2026, right, January, or some 35s out to like March, So we'll see what happens. But my outlook, my educated guess, right, would be that we're going to have some good numbers during earnings. I think that Ryan Cohen is steering the ship kind of the way it needs to be steered. I think we're going to show growth. I think I'm very interested to hear if we have any more um, investments, right, that he's jumped in on. I wouldn't be surprised to hear that they took a vested interest in Unity. Um, it's a video game. Unity is a company that is really big in the gaming industry, and everyone that's into Unity absolutely loves Unity. So I mean, it's just obviously I'm just curious. There were some whispers here and there that they may have taken a vested interest, or Nvidia. If they took a vested interest in Nvidia, I mean, why wouldn't they, right? And then that's a long term hold. Vested interest in Microsoft, right? Because of the Xbox. I mean, there's so many ways that they can go and invest those $9 billion that they're sitting on, right? And Ryan Cohen has said, that he would like to make um, GME be the next what's this company that the Oracle of Omaha manages, man. Berkshire Hathaway, right? I mean, that's how Berkshire Hathaway started, right? He sits in a pile of cash, and then when companies, tank, and he sees that they're undervalued, he goes in and he buys a majority stake on it, or a big chunk of the company, and then he holds, and just the sheer fact that he invests that money in there and waits for it to grow, and then people say, hey, this guy's making money, let's jump in, and they pile on, and then the company's price per share rises. I mean, that just the sheer fact that he does that, that's how he's been able to now um, charge over $500 million per share. What is Berkshire Hathaway trading at right now? Let's see. 749,781 and 30 cents per share. That's Berkshire Hathaway, grade A stock, my friends. Um, that is insane. This company in 2001 was around $68,000 a share, and in the last 24 years, it's grown up 11-fold. I mean, that's insane. Um, $750,000 a share. Do you understand? I'm not saying obviously that GME is going to be $750,000 a share. I'm just saying that Ryan Cohen is basically using that same school of thought, right? That Warren Buffett has, which is he goes into a company that he seems that he's is undervalued or an asset, and then he's willing to take a chance and hold, right? And I'm very curious to see if Unity is one of them, Microsoft will be another, Nvidia, um, so I'd be just I'm fascinated at how things are running now, and I have a good feeling right now. I hate to go by feelings, right? Because the stock market is a device where feelings should be taken out of, right? But just the fact that it's been run the way that it's been run, and then you get to actually see um, the difference between that company, that's kind of quiet and then just does their thing, and it's helmed by a good CEO. The future looks good, man. The future looks good with GME, and I'm again as a shareholder, I'm very excited to see earnings, and hopefully we get a nice little pop to $25, $26 a share, if not more. Hopefully shorts get stuck a bit and then caught with their pants down, and we have a move to 35 bucks. That would be great. But I hedged my bets, so to speak, right? I have cash secure puts in the 22 and $23 land, and I have covered calls in 23. So I'm kind of choking it in that price point. But again, I've only written covered calls on like 500 shares. I have several thousand that I have not written in, and I am itching to write. And I'm going to start writing monthlies on those, whether you know we have a big pop or not um, during earnings. So we'll see what happens. I'm very excited to see how earnings will turn out, Karen D. And you should too if you own it. I mean, I see nothing wrong on Monday once market opens, right? I see absolutely nothing wrong when the market opens and then you decide to take a nice little dip. If it sees red for a little bit, right? Usually I say people should wait 5-10% on the downside, right, for a stock to get hit and be on the red, and to sell some cash secure puts. But because the volatility is so high, and just because the delta doesn't burn as fast, and the theta doesn't burn as fast with GME, I would say, if you go out to, like, let's say January, right? You can sell a $22 cash secure put on GME and try to get $3 for it. You get 22 bucks, right? So that's $2,200. You're bringing in 300. So you're realistically buying at 1,900 if you were place those shares. I think that's a wonderful position to be in. You're basically owning the shares at 19 bucks, and then you get to start a nice little position. I see nothing wrong with that at all. You know, um, so yeah, and put a stink bid out there of $3, get paid $300 to buy GME at $22. There's nothing wrong with that at all. You know. All right, what else do we got here, guys? You guys can ask me anything. This is like a get to know the savage. Uh, show this time. I figured you guys are spending your valuable time of your life watching me all these mornings, and you know, you guys can ask me away about personal stuff. It's cool. If it's something I can answer, I'll answer it. You guys can ask away about credit cards. I'm also the credit savage of Wall Street for a reason, right? So I'm a credit card guru. I haven't paid for a hotel in years. I haven't paid for a flight in years, and I just basically do free travel by using credit card points. I love credit card hacking. It's kind of my thing, right? And especially love taking premium money from the gamblers of via cash secure puts or credit covered calls, and then paying off a brand new credit card that I just took out, um, and then bringing in points because it's like it's like it's a win-win-win because then I'm able to transfer those points that I generated during promo time um, into a transfer partner of a specific like American Express or Chase, and then I get flights for free and stay at nice hotels for free. It's pretty awesome. And just because I hold those credit cards, um, I also have a high status with a hotel or an airline, and then they just treat you better, man. So at the end of the day, I like comfort, and I'm okay paying a premium for it. But alas, I don't pay anything. It's just points. It's a credit card, and I have no problem paying a premium for a credit card when the benefits that I get are far outweigh that fee because I'm able to recoup that money, right? It's one of those things where you get it's one of those things that you got to take into account what cost is and benefits, and then you get to see how the cost absolutely outweighs or the benefits absolutely outweigh the cost, and you're actually able to make money on some of those credit cards if you just play the game right. So it's all about you know knowing how to do it. So anyhow, so Moneymaker One is in the house. Yes, sir. How you doing, Moneymaker? Karen D saying thanks, Hector. Ken's mom is in the house saying Savage is on. Ken's mom, good morning. Karen D saying, how do you feel about Uncle Bruce's idea of now owning stock? Just cash and cash cure puts. Now owning stock or not owning stock? Okay. So I think I I'm okay with that, man. Like I just I have a channel, and I tell you guys in the interest of full disclosure, I tell you guys I own every stock that I talk about, unless it's one of you that you guys bring up, right? Uh, I'm okay with that, man. I think that if anything, he's able to give you better insight now because he's got skin in the game. Before I think when SoFi used went down to $4 and $5, he used to tell people to do $15 covered calls or cash secure puts or $20 cash secure puts out to 2025 back then and bring in like dollars, right, and stuff like that. And then I don't think he knew just how bad SPACs were going to get hit. And so we saw the stock go down, severely, right? And then people got $20, $15 cash secure puts, placed on them, and they were owning the shares at 15, 14, $13 break even, but the stock was $5, right? And so they were just angry, and then Uncle Bruce would just say, "It is what it is," and so it's just it was a little hard hearing it because a lot of people actually placed their trust on someone that had no skin in the game, and yes, it is what it is. I get it. You're not supposed to have feelings, and he never forced anyone to buy anything, right? Like he would just basically he would say, here's my classes, learn how to write covered calls, cash secure puts, butterflies, iron condors, and so on and so forth. Um, and rightfully so. I mean, he has over 40, 50 years of stock market experience. He's been the vice president of a trading company. He's been on the floor. The guy, I mean, he's my mentor, right? So, or one of, and I absolutely, I love Uncle Bruce, man. But I happen to have a few disagreements with how he managed that specific that part of the way he ran his channel, which was just saying it is what it is when people were losing a lot of money, because some people were spent $20,000, $30,000 on cash secure puts, and then they were down like $15,000. And yes, they if they held and they they recovered, and then right now they're laughing, right? But it's just, um, when you have skin in the game, you're able to be more careful and kind of you're able to communicate, I think, a little better and have better tact, which is why whenever I do talk about companies that I own and companies that I'm vested in, and people are trading those, for example, C3.ai just took a massive hit, right? And it went down from like 23, $24 a share to 15, $14, and people were like, man, I got placed my $25 cash secure puts, or some 30s that they sold a year and a half ago, 2 years ago. I never endorsed $40 and $30 cash secure puts on C3.ai, and you guys can go down and see the videos, right? But I did endorse when it was the 25s, right? And I think I was writing 25s myself, like a year and a half ago, a year ago, and it was like, I think I got $7 or $8 for those cash secure puts, 25s. And then I was like, well, if I get placed those shares, it'll be like basically for $17 or $18. To me, that was not terrible. But now, I got put those shares already 2 weeks before expiration date, right, which is September 19th. I got placed some AI shares in my portfolio, the 25s, but my cost average, right, was like $18, um, or break even point. And so, I'm like 17 something. So it's not as big a hit because the stock is like $16, right? So I can write one covered call out to like 4 or 5 months, and then bring in and be at break even, so to speak. But I honestly think that the company will be 19, $20 by probably October. So I'm, of course, I'm timing the market, and I hate, saying don't time the market, time in the market. But again, I've traded this stock for like 3 4 years now, and I'm fairly confident that I know how it moves. The moves that they're making are good. There's a new CEO that came in and will helm the company. The guy has a good pedigree. He has um, good history with AI companies. He actually founded a couple himself, and then he sold them off to Salesforce. And so that means that he has Mark Benioff, on speed dial. And if I think C3.ai may actually do something in conjunction with Salesforce, and then they'll integrate AI into their business model, and I think that is going to be a big thing. Um, Mark Siebel also has connections to the governor of California. And the first lady of California is Gavin Newsom's wife. That's Mark Siebel's cousin. So some contracts from California would not hurt. This is the fourth strongest economy in the world, and so I have good um, I have good reason to believe why C3.ai, I think, is just doesn't belong where it is. However, the stock is what it is, right? Like we are where we are, and so I just at this point I'm trying to see how it behaves in the next few weeks, and I want to see what October is looking like, because September historically it's a month where um, stocks sell off. uh, I mean, the last few years, that's the way it's been. If you go to the 50s, a year after elections, September tanks. Um, and a year, before elections, it tanks. And so, like, right before recessions, it tanks. After recessions, it tanks. And I mean, it's history right now. Yes, of course, past uh, 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 what is it they say in prospectuses? Basically, just because of past behavior does not dictate future outcome, right? So it doesn't mean that this is going to happen either. It may very well be September where we keep the bullish momentum going, but I don't think so. I think that September is we're going to keep selling off. I think that we are frothy. Um, I think that there's companies that have no business being where they are at this point, like Palantir. Palantir should be like $70 a share, $80 a share. You know, I think that Amazon should not be where it is. I think that you know Microsoft should not be where it is. Um, I think that Snowflake should not be where it is. Figma should not be where it is. Bullish should not be where it is. It should be like in the 40s, 30s. So again, there's a lot to talk about. There's a lot of companies that are just overvalued, and people are trading them at a premium. Tesla should not be where it is. Tesla should be closer to $200 a share. Again, we are where we are, though, right? I have some 190s cash secure puts that I sold on Tesla like a year and a half ago. I took a ridiculous amount of money for those, and I'm just going to let them expire. I am daring the market to take me out. Those expire, I think, December 2026. So I'm crossing my arms. I've already made, I think, over 60% 70%. But at this point, I'm just crossing my arms, and I'm hoping I get put those shares. Because my cost break even is like 130 or something like that, or like 120s. I'm very excited to see what happens then. But until then, you know, um, we're gonna play the cross arm game, right? Like nobody crosses their arms better than us, and sometimes the hardest thing to do is actually wait and cross your arms and getting rich. So we're either going to make money or more money in September, but you have to where to strike. You got to become a sniper. You got to know you know this company got hit 10, 15, 20% today. It's a company I've been looking at. It's got good fundamentals. um, there's nothing wrong with it. It's just it's at the mercy of the market right now. People are taking money. I think margin calls happened Friday, and then we started to recover a bit because people were trying to find their footing. But I mean, there's a little more room to the downside. We're trading at like multiples we should not be trading at, um, but we are where we are, right? So September, I think September's got more room to the downside. Uh, I think Uncle Bruce owning stock in through cash secure puts is actually a very smart thing to do. That's what I have. I'm sitting on like I think 70% of cash secure puts right now, right? That's where I have all my money. I'm sitting on a pile of cash. And for whatever reasons, if I get assigned those shares, great. Because then that means that I bought those shares on a day that the stock was already down 15, 20%. And then I went down two strike zones below that. So I'm essentially buying uh, that stock at like a 40% discount. Um, I know that stock could be as expensive as it was before, right? And so it's just a matter of time. And then I'll see how it recovers and I'll do my cover calls. So I'm not afraid of the downside, nor am I afraid of the upside. I have my positions, and sometimes, I adjust. I just took a couple of losses, right? I think you guys know that I sold Lucid. I sold my positions on Lucid. I bought back covered calls. So I bought back a lot of covered calls, and I made money that route. But I still, even then, my average was so that even if I sold those covered calls or bought back those covered calls, and then I sold the shares, I still took a hit, right? And that's okay. Sometimes you got to take that hit, and you know what? I was good. I was right to do so because Lucid then they did a reverse split, and it's taken even a bigger hit. It did a 10-1 reverse split, and then I was like $20 a share when that went through, and right now, um, I think the stock's like $15 a share. So I would have lost an extra 25%, and I didn't. Now, I can wait. I think 31 days, and I'm going to use that as a tax loss harvesting, and then on the 32nd day, right? It really I could wait 31 days, but I'll do it on the 32nd day. On the 32nd day, I'll go back in and see where Lucid is, and I may go back in through a cash secure put or two. So we'll see. We'll see. Bruce has got the right idea. I mean, I think more people should adopt that idea. Go into stock that has been just undervalued, right, and has gotten hit, and then and enter the position through cash secure puts. So you're basically, you have a pile of cash, say GME for example, and then you do $20 cash secure puts out to 2027, right? What are those giving you right now? $20 cash secure puts going to January 2027. Those are giving you $4 right now, right? So instead of putting your money in the bank, you put it in a Charles Schwab account. The uh, the fund is called SVWXX, I believe, and they give you around 4 to 5% um, interest on your money, right, every year. So this is what you could do. You could take, I don't know, $20,000 and place it in there and say, I want my money in this ETF, this fund, right? And then um, you're gonna get 4% back or 5% back every year on that money. Um, you can now do a cash secure put. You could do 10 cash secure puts on GME, you know, to 2027. And guess what? Now you're gonna get back from those $27,000, you get back $4,000. So now you have, instead of having $20,000, you have $24,000 in that account, right? You could do more cash secure puts from those $4,000. You could do two more, right? Now you got what? You got $800 back, right? So now you're sitting on like almost $25,000, and then now those $25,000 you're going to get 4% back on in a year, right? So you get, say, 5% back in a year. What's 5% of 25%, or 25,000, right? Um, 1,250 bucks, right? So okay, and in a year you'll have 26,000, 500 bucks, and then the next year you're gonna have 5% of that, right? So it'll compound, and if you don't get placed those shares, no big deal. And if you get placed those shares, then they'll just give you the shares, and the money comes out, no big deal, right? And that's it. And then you could do it again. So you're sitting on cash, and your cash is making cash, right? And worst case scenario, you get all those shares, and then you could do covered calls when you get placed those shares. But you probably won't. I don't think GME is going to be $20 in 2027. I think it'll be closer to $50 a share, if not more. Again, that's my opinion, of course, right? And it's okay. It's a valid opinion. Some people may think otherwise, but I think I have a good reason to believe that. All right, what else do we got here? Alex is saying Tasty IV Crush incoming on GME later next week. I agree, my friend. That's exactly why I'm sitting on those cash secure puts and those covered calls at $22 and $23 a share. And I mean, strikes. And I can't wait. I am going to make some nice amount of change. Karen D saying, "Oh, okay, you're going back up to your thing. All right, that's cool. What else do you guys have, man? Feel free to ask away. As of right now, I just I'm excited to see what the next week is going to bring to the stock market. We have our Savage 20 now, and I'm very excited to see the companies that I'm holding that are Savage 20. So I'm going to be talking about these stocks fairly frequently because these are going to be my Savage 20, and you guys, you don't have to go in and trade what I'm trading, but if you guys put an alert on that, see how these trade, right? And see if they're your cup of tea, because I think you're going to make a lot of money if you enter them on red days via cash secure put. And I advise going in on a day that the stock falls 10% or more. So you can go below one strike below where it is at, and then go down 3 months for the cash secure put to bring in, a nice big chunk of change. If that stock happens to fall down 10% more or 15% more in the coming months, guess what? You got it right where you're supposed to be, and you got it at a discount. Great. Now you can do more cash secure puts and average down on that, or you're going to get more money. And then you're going to get your premium back, which is your collateral, right? And then you'll rinse and repeat. Sentinel 1 The ticker is S, right? It's one of them. Navitas Semiconductor, NVTS, is another one of the Savage 20. SoFi Technologies, we're going to be watching for the next few years. UiPath, PATH, great company to hold via cash secure put. Great company to have long term. I believe. I believe. What's her name? Kathy Wood has taken a big stake on that on SoFi as well. Uh, let's see. Figma. I'm looking very curiously at Figma. I think they're overvalued right now, but the ticker is FIG. Um, they should be in the 40s, maybe in the 30s, 35s. If you sold some $35 cash secure puts and brought in some nice change, I think that'd be a great starting point to hold Figma. Will it get there? I don't know. Like people are seeming to pay a premium to hold it. They like it. Um, so we don't know. We'll see what happens, but I'm very interested to enter it via $40 cash secure put, and I'm trying to bring in five, six, $7 for that cash secure put. So we'll see. We'll see. I'm gonna keep an eye on Figma, FIG. New Scale Power, SMR is the ticker. It's another of the Savage 20. We're watching it closely. I think the 52-week high is $53.50. It's sitting at $34. So going in through a $30 cash secure put, um, I'm very curious to see what Monday brings, but I didn't get filled on my December cash secure put, my $30 cash secure put. I was asking for $5. It went up as high as $4. So I'm trying to get $5. So I'm gonna keep doing that and see that I basically buying into the company for $25 a share. I think that's a good starting point. Um, D Wave Quantum, QBTS, quantum computing is going to be the next frontier. It's going to be the next AI, so to speak. And when it happens, and everybody's talking about it, it's going to be too late. So right now, I'm really trying to get my foot in the door via cash secure puts with QBTS. Um, I have some $18 cash secure puts that I got like 450 or 480, 475 for. They expire January 2026. So basically, I'm willing to pay almost $13 for the shares, and that's how I'm going to enter that trade. I have no shares at this moment, but I do have cash secure puts out, and we'll see how that happens. RXRX is the next one of the Savage 20s. I think $455 cash secure puts out to 2026 are a good way to enter the trade. Personally, right? I'm not giving you financial advice, but it's a good starting point. I really like the company. I like what they're doing. They have some really good contracts with Bayer and Merck, and these are some really heavy hitters in the the pharmaceutical industry, and they're kind of like a hybrid of AI and pharmaceutical. When this stock flies, it's going to go, and it's never going to look back. AI C3.ai, you guys already know that's my favorite, one of my favorites. It's a $40-$50 stock. It's just there. It's the amount of bad news that keep coming because of peripherals on the company have been insane this year, and it just at some point things are going to settle. And right now, I'm just adding as many shares as possible. I really, really, really was um, kicking myself in the ass for not buying more shares when it was $10 a share, $11 a share a few years ago, and it got hit hard. Um, and I have my opportunity now. I'm going to take it because I know where the stock is going. I know, well, nobody knows where it's going, but a very good, very good idea of where it might go based on all the information that they have and all the connections that the board has. And I'm just very curious to see if I am right. Right. So until then, I'm going to keep trading it. I'm doing cash secure puts, cover calls, more than once a way to skin the cat on this one, and I'm just via cash secure puts or buying outright the stock. I'm okay with that, and I'm just adding more shares. SMCI Super Microcomputers, another company you guys may want to look at. Keep it on your radar. see what how it trades. It's a company that's gonna fly when it flies, and so it's one of the Savage 20. Um, $40 cash secure put, bringing in $4 or $5 for it. It's great if you go to the January. Um, I like the stock. ASTS Space AST Space Mobile ASTS, another favorite of mine. I have some $50 cash secure puts that somebody paid me. I think like $15 for. I'm good into 35. Those are expiring in I believe June of 2026. Um, Folding my arms on this one. I can't wait to get placed those shares. Nvidia, Nvidia, I think it's overvalued, but I don't think that it's a bad company at all. I think they're doing what they're doing. They're the only one to do it. Going into $140 cash secure puts out to 2026 June or further out. I think it's a great way to enter this trade. Bring in 10, 15,000, $1,500 for that cash secure put, and essentially buy Nvidia for like, I don't know, 125 a share. I think that's a good starting point. I think that's a fair share value. And I think it's a company that's going to be $400 a share. It's just not now. Um, GameStop. It's another one of the Savage 20. You guys already know why. I've been talking about it ad nauseum. So they have earnings coming up. Entering via cash secure put, not a bad deal. Nano Dimension, NNDM, another Savage 20. Um, it engages the provision of intelligent machines for the fabrication of addictively manufactured electronics. 136 a share. You don't even need to go through cash secure puts. I would just buy the damn shares, buy the damn stock where it is. Buy 100 shares. If you have an extra 135 to $136, and see if you get placed those shares and then hold them and see what happens. Maybe in a year or two, those shares are going to be $5, $6, $7 a share. Not bad thing. AEHR. It's it's a test system that engages in the design, manufacturing, marketing, and sale of test burning equipment used in the semiconductor industry. They are $25 a share. I think going in via cash secure puts on the 20 side may not be a bad idea at all. Wait for a day that it goes down, 5 to 10%, and enter that trade that way. Um, ORGN, Origin Materials, basically are kind of like they're trying to make it so that you don't use cardboard anymore. They're kind of the answer to cardboard by using synthetic material, and at this point, it's at 52 cents a share. If you have 52, $53, get 100 shares. You may be pleasantly surprised that it 100 x's in the next 3, 4, 5 years. Why not, right? Ion Q. Ion Q is a favorite of mine. I entered the trades when I was in the $14, $15 land. It's now $41 a share. I think it has room to the downside. It went up too quick. It could come down to like the $35, $30 area. I think some $30 cash secure puts out to like 2026 June, maybe a great safe bet to go into Ion Q and starting a position. ABCL, Upsilera Biologics, it's 421 a share. I think at this point, just watch it. 52-week high is 582. 52-week low is like 130, 140. So wait for it to come down to like 350, $3 a share, and then maybe either buy the damn stock or go via cash secure put some 250s, and then bring in some money and get paid to buy the stock. Um, they're engaging in the development of therapeutic antibodies, and they're into the discovery platform that searches, decodes, and analyzes natural immune systems to find antibodies. So it's a pharmaceutical and a biologic. So again, it's one of those that you kind of have to. These are my Savage 20 because I'm watching them for the next 4 or 5 years, and although I've been wrong a few times. I've been right on the stocks that I buy, like a good 90, 95% of the time. So that's not a bad track record. If you win a lot more than you lose in the stock market, you're doing well. Ginkgo Bioworks, that's the ticker is DNA. Um, they're basically a holdings incorporated biotech company, which its platform enables biotechnology applications across diverse markets from food, agriculture, industrial chemicals, and pharmaceuticals. So they have their hands on so many cookie jars. Um, they have um, a very good CEO, very good board. They have been as low as $5 a share the last 52 weeks and as high as 16. I think going in on a $10 cash secure put and bringing in a dollar or two per share, it's a great um, it's a great starting point to own the company. Again, you're gonna have to, do your due diligence and research yourself. Of course, it's just my Savage 20, but I'm just giving you guys like ideas about different companies that are out there, right? Schrodinger, SDGR, another one. It's 1913 at this moment a share. The 52-week low is 1660. 52-week high is $28. So right now it's kind of like a closer to the 52-week low than it is the 52-week high. I think on a red day that it drops 5% to 10%, you go in via cash secure put, you bring a dollar or two of premium, start a position, not a bad way to enter a position on this company that I think it's probably going to 10x in the next 4 or 5 years. But again, you have to do your due diligence. SDGR is the ticker. Schrodinger is the name of the company. Look it up. You may be pleasantly surprised. And of course, Webull, Bull. It's a direct competitor to Robinhood, and I think it's better. They are international markets, and when they go, they're going to go. I think that they're spending so much money right now trying to like just grow the market or grow their business that they're not keeping so much money cash on hand because they just want to keep making it work for them, and I think it's working. They're making money already. They have a premium package that they sell, a good product. I trade on Webull. I like their operating system, and I think it's not supposed to be where it is. I think it ran up too quickly, and they got shorted heavily, especially by the fans of Robin Hood. However, it's $12 a share at this point. If you entered maybe some 12.50 cash secure puts going out to January, you could bring in 250 so that you could basically buy the shares at $10. I don't think that's a bad trade at all. I think that's a great entry. The stock should be closer to $20 a share at this point, 20, $25. But remember, Robinhood used to be $8 a share, right? They got to $8, $9, $8, $7 a share. So I mean, there's history that shows you that these companies, people like to see how they're gonna work, and I keep dumping money into Webull. I keep dumping money into Robinhood, into like my Charles Schwab account, and I'm sure that I'm not the only one. So these companies are making money. It's just that I think that the street is trying to see how it's going to work. It just went public, right? And so give it a minute. But right now, I think a great starting point would be via cash secure put on a red day and bringing in a couple of dollars for you to enter owning the stock. That would not be a bad deal at all. It's been almost an hour, my fellow simpletons and degenerates. I'm going to go and be a dad now. My daughter actually has a game coming up. My son's game is done. My daughter's game is coming up. And so I'm going to hit the road. But thank you for watching. It was a great conversations that we had. I like the questions you guys had. And I'm happy to see you guys are doing well. Tell me the exact date of the next pullback, says Chase Rosita Parker. I'm going to keep that one to myself. Myself and Jerome Powell are the only ones that know, man. So, but if you give me a donation of like, I don't know, $1,000, I may give you an insight. Or you can buy my courses. I don't have any courses, guys. I'm just talking crap. Anyways, thank you so much for watching, guys. I appreciate you guys tuning in on a Saturday and then listening to me ramble on and whatnot. Chase Rosita Parker, thank you for watching. Karen D, Alex, Kent's mom, Moneymaker Juan, Hector, Double D, I appreciate you guys very much, man. You guys have a great rest of your weekend. I'm gonna go on again tomorrow, 5:30 p.m. Hopefully, 5:30 p.m. California time. If not, then on Monday at 8:30 a.m. We'll see what the market is giving us. All right, guys. I'm the Savage of Wall Street. Thank you for watching. See you guys later. Have a great day. Bye, you knuckleheads.